Tesla stock is headed to the moon. What's up, traders? It's your trading BFF, your trading bestie, Kevin from Touchdown Trades, coming at you 30 floors below ground level from the Touchdown Trades trading bunker. So what in the heck is going on with Tesla stock? It keeps going up and up and up. It's on a meteoric rise. So why is this happening? Earlier this week, there was a leaked email from Tesla management that was basically encouraging Tesla employees to put in all the effort that they could because they were this close to breaking even on the quarter. Well, Kevin, you're talking about being break even. Why is that important? Well, analysts were expecting Tesla to report earnings of negative $1 per share. So if they're close to breaking even on the quarter, that is absolutely huge news, and it sent the stock skying higher. And I was seeing all these social media posts saying Tesla's topping out. I'm calling the top on Tesla. Well, they reported earnings this morning and they crushed expectations on deliveries, so that sent the stock even higher. We broke 1,200 today, so I'm planning to put a trade on next week where my profit potential on this trade is going to be $10,000. So I must be buying the stock, right? I'm not crazy enough to short Tesla and be one of those idiots that Elon Musk is making fun about, talking about he's going to be wearing short shorts and all these shorts that are short are going to be wearing red short. Well, nope, I'm not going to be buying Tesla and I'm not going to be shorting it either. So Kevin, what in the are you talking about? You're not going to be buying it or shorting it? So how are you going to be putting this $10,000 trade on? Well, we're going to be talking about that and more in today's Touchdown Trades market analysis. Alright, trader homies, so I got a Tesla chart pulled up here, and let's go over the chart, go over the technical analysis, and then I'll show you the trade that I'm going to take next week that I plan on making 10 grand on without having to buy Tesla stock at its current highs or short it and risk being bait on an Elon Musk joke. So here we go. We got the Tesla chart pulled up, and we can see that we had the huge Rona sell-off, and we've since made a huge move since then. And this is the move created by the email, the leaked email, and this is the move created by the better than expected delivery and earnings reported this morning. So if we dive into an hourly chart, we can see we were kind of just consolidating. We had a nice little descending triangle or trend line, whatever you want to call it. And we had respected it several times. We weren't really selling off. Every time we'd sell off, we'd get bought back up into the trend line, but we were having trouble breaking out over it. So what happened is when the email where Elon Musk management was pushing employees to put in work and work hard because they were close to breaking even on earnings, when analysts were saying that Tesla was going to lose more than $1 per share, and investors were shocked when they found out that there was a possibility that Tesla was going to even break even. So buying came in and we broke over this trend line. And once we broke over this range that we've been trading in for a few weeks, it was off to the races and we were heading for the moon. So these 2 days of buying here were caused by the email. And then this move, this secondary move, was caused by the better than expected deliveries and the earnings report. So in just 2 days, we went from under $1,000 per share to over $1,200 per share. So about over 20% move in 2 days in a large cap stock with a huge float and a huge market cap. That is gigantic. 20% on a $1,000 stock in 2 days is huge. So with that said, how am I going to make 10 grand next week trading Tesla if I don't want to buy it up here at the highs? And I'm not going to dare to step in front of it and get short? Well, to do so, I'm going to attack it through the options chain. And options give us the ability to capitalize on a lack of a move, so to speak. So my expectation for next week is that Tesla kind of needs to digest this move. It's just made a gigantic move, and I'm not saying it's going to sell off, and I don't think there's enough battery left in the tank. Get it? Battery left in the tank. So I think it needs to to just digest this move for maybe a couple weeks. So I think we're going to see some choppy action next week, and I'm going to attack it by trading what's called an iron condor. So if we go back to the chart for just a sec, and then I'll jump into the trade. What I'm thinking is that we trade in a range somewhere between, let's say, 1265, 1270 down to 1140. Okay, so I think we chop around in that range, which is a pretty huge range. That's a $120 range, about a 10% range. So we do got some wiggle room there. So if we go into the options chain and I pull it up, so to do this, just right click it and you want to go sell an iron condor. And what that is you're selling a put, you're selling a call, and you want the stock to stay in that range. And then at expiration, you keep everything that you brought in by selling the put and call. And to protect yourself, you're also going to buy a put lower than the put you sold, and you're going to buy a call higher than the call you sold. So you're going to be taking money in, and you're also protected because you bought a put and a call as well. So if we see here, I'm selling a 1260 call, and I'm buying a 1280 call. I'm selling an 1130 put. I actually want to move that up a little bit. I want to move that up to 1140. And I'm buying an 1120 put. And that's going to give me a net credit. I'm going to bring in $6. I actually want to make that $7. Put a limit order out at $7. So it'd be, $700 per contract that I sell. And I want to sell 15 of them. So if we sell 10 of them, it'd be $7,000. So if we sell 15 of them, we're taking in a credit of $10,500. And real quick, let's analyze the trade and see what we're risking. So expiration is when? Next week, it's going to be the 10th of July. So if we analyze the trade here, we can see that on the 10th of July, we sold the 1260 call. So what are the odds of us being under 1260 at the 10th of July? On July 10th, we have a 66% chance of being under 1260. So we also sold the 1140 put. So what are the odds of us being over 1140? So we also have like a 66% chance of being over 1140 on July 10th. So this trade has a probability of about 65% of working out in our favor. If it goes against us, and let's go to the charts, and let's say it goes against us and it rips up and Tesla breaks above the 1280 call that we sold, and it goes to $1,300. We would lose $2,000 minus any credit we took in per contract. So we're selling 15 of them. So we'd be down $30,000 minus the $7,000 we took in. So we're risking $13,000 to make $10,000. The risk to reward isn't 2-to-1 like I usually like, but because the probability of the trade working out is over 65%, it doesn't really matter. It doesn't need to be 2-to-1. The percentage is there. The risk to reward is there because of the accuracy percentage, the chance of Tesla staying in the range that we need it to stay in next week. The trade is a valid trade setup, and I'll be looking to take it on Monday. I appreciate the view, guys. If you got anything from this video, if you learned anything at all, do me a favor, hit that like button. If you haven't subscribed, please do so. Hit that subscribe button for me. We're doing live trading videos, swing trading setups, and going over all the trades and market analysis. Every single day, we're breaking down the stock market, breaking down the hottest stocks. So hit that subscribe button. I'll catch you in the next video. Peace.
Drop.